Let me know if you guys could hear me in the chat. Just give me a thumbs up if you could hear me. We've been having some technical issues over the past couple days, so just let me know. You know what I've also noticed? I think there's about maybe like a 40-second delay from when I'm talking to when the chats come in. I've just noticed that as I've been looking at the sort of the back end here. Here, I'll give you guys a behind the scenes look at what I see when I start the stream. Let me just make sure there's no proprietary. No, there's not. So when I start the stream, it looks like this. And I noticed a delay of like maybe 30 seconds. I'm going to see if I could fix that because there's a little bit of latency. I don't know if that makes the stream awkward or not. Anyway, I guess it doesn't matter. All right, let's get started. All right, welcome back, everybody, to Walks in Wall Street. Today is October 27, 2023. It is a Friday. Happy Friday to everybody. Now, before we get started, I just want to announce really quickly, if you haven't already, go ahead and check your email. I did send out the email last night at 6 o'clock. So every other Thursday after the market closes, right around 6, we will send that Behind the Street newsletter. All of the equity research will hit your inbox right around 6 o'clock. So if you haven't had a chance to take a look at that, maybe it's in a spam folder or something, but I could assure you that it is in your inbox. It talked about a lot of things, and I think the most important things, not only of the week, but also looking forward into the remainder of Q4, going into Q1 of 2024. So we started off talking about bank earnings, but not just the basic earnings reports of what they earned as it relates to profitability on the bottom line and also on the revenue front at the top line. We mainly talked about some key metrics that were pretty concerning. Now, I did get a lot of feedback. The majority was positive. Now, I don't want to come off as it's inducing fear, because it's not. Essentially, it's just we're noticing a trend towards pre-pandemic levels as it relates to delinquencies and credit losses on cards and consumer loans. For example, if you look at the data from Q4 of 2019, right, this is right before we entered the big C, the pandemic, roughly net credit losses, or the NCL rate of Citi, right, for example, Citigroup, was right around 3% to 3.25%. every single quarter since all of the, I should say, nonsensical QE has subsided, right? Massive liquidity injections into the market as it relates to monetary and fiscal stimulus. There was a direct correlation of a massive increase in 30-day delinquencies and 90-day delinquencies. So what this tells me, right, we always try to piece the puzzle here together and try to frame a worldview and then have a forward-looking view. And for me, it's that consumers, mainly in America, essentially used a lot of that liquidity, spent a lot of money, and racked up massive amounts of consumer debt that is now holding a balance just as interest rates are at some of the highest levels in pretty much a decade now. If you review the Fed funds rate, or the Fed funds target rate, it's in a range of about 5.25% to 5.5%. And as we look out to the next monetary policy decision, that's going to be at November 1st of 2023, which is next week. This is the last full week of October, which is kind of crazy to think about. We have, November to look forward to. Then we sort of talked about small cap stocks and how small caps, particularly Russell 2000 and the like, are taking it a little bit more on the chin as it relates to the S&P 500 counterparts, right? And that mainly has to do with balance sheet stability and exposure to debt. Now, 30% of the Russell 2000, right, or 30% of companies in the Russell 2000, their debt is floating rate, okay, so adjustables, as opposed to just 6% adjustables or floating rate debt for the S&P 500. Also, the long duration debt that a lot of these companies hold is a little bit more manageable as it relates to its maturing cycle for the S&P 500 relative to the Russell 2000. So not only is a larger percentage of the debt that Russell 2000 companies hold, not only is a larger percentage of that debt floating rate, a lot of it is going to come to maturity over the next 5 years. And I think as the market is forward-looking, if you just type in ticker symbol IWM, for example, the Russell 2000 is really, really selling off quite severely here, and so is the S&P 500. But if you look at it on a relative basis, there's been a significant breakdown in small cap, particularly Russell 2000, and the S&P 500 has been holding up a little bit better. So we're starting the stream late. I was in the office. I was doing a little bit of post-analysis, and I kind of went down a rabbit hole a little bit. We all tend to do that sometimes. And I was thinking about, I was actually going through my Dropbox file that I've had since, I was in college. And this market is kind of reminding me of 2008, Q4 of 2018, I apologize. So if you pull up your Bloomberg terminal, MarketSmith, or TradingView, and you type in ticker symbol SPX, which is the ticker symbol for the S&P 500, and go all the way back to December of 2018. We had a massive waterfall sell-off going into Christmas Eve. I remember this quite vividly because I was on the Long Island Railroad, and I remember at the time the S&P 500 bottomed on Christmas Eve right around 2,200. It's kind of wild to talk about those numbers, right? 2,200 as the S&P is trading at 4,100 now. But you usually have a lot of that deterioration and waterfall type sell-offs when you have significant deterioration in market breadth, right? And that's one of the things we talked about in the newsletter. Now, it's good news and bad news because when you have deterioration in market breadth and have a very, very thin market, you usually tend to have these capitulation events. But they are generally followed by very aggressive, extremely aggressive, snapback rallies in the market. So that's maybe something we'll talk about a little bit later. So I'm going to go ahead and close up the laptop here, everybody. I will say hello to everybody in the chat and wish you a very, very happy Friday. And just once again, if you haven't received the newsletter, just go ahead and check your email, because last night at 6 o'clock I did send that out to everybody. And if you haven't received it, if you just scan the QR code on your screen, it will bring you to our latest research report that you can check out for free. So let me go ahead and close up the laptop, and we will get started in just a moment. Happy Friday to everybody. All right, let me just clip on the microphone here. Again, apologies for being late. I was working very, very late tonight, which I do apologize for. Hey, Sharon is here. What's up? Says, hope everybody's having a great evening. Latasha says, happy Friday, Tom. Hawaii is here. Gary Carpenter. Colton Manning. It's good to see you. Thank you so much. Joan K, welcome. Thanks for being here, Hawaii. Hopefully you all are doing well. It's good to see you. Very, very good to see you. Now, the good news, I have some additional good news. Guys, it's gonna be 80 degrees tomorrow. It's gonna feel like we're in downtown Miami. And tonight it's pretty warm too. It's actually really nice outside. It's probably in the mid 70s. I even left my jacket in the office because it's so warm out. And tomorrow it's going to be even better. It's going to be bright sunshine, not a cloud in the sky. And this is going to be the first weekend in 7 weeks. The first weekend in 7 weeks that it's not going to rain here in New York City, thank God. And we're going to get an 80-degree day, which is absolutely fantastic. And I think we deserve it because right here in New York, so that's good. Richard Vogel says summer is back on Long Island. Good to see you, Richard Vogel. Hopefully I'll be making my way out to Long Island quite soon. Dan Zhang says, hey Tom, only gonna say hi tonight. Gonna go to the club with my friend. Awesome. Dan, enjoy yourself, be safe. Hopefully I'll have some time to get out and enjoy the weather tomorrow. I may go for a run tomorrow morning, we'll see. All of the security is gone by the Trump Tower now. Ooh, Bernard Conte says, Tom, it's 44 degrees over here. It'll be like that before you know it back in New York too. Deborah says, I think it's supposed to rain on Sunday. In New York, I hope not. I don't know. I was looking at the weather report for Saturday and I got all excited, but we'll see. Gary Carpenter, what's up? I see RB says, hey Tom and all, welcome. Bree Graham says might be getting lows in the 50s in Halloween in Phoenix. Wow, that's pretty good. Well, Halloween is next week. It's kind of crazy how, you know, time just absolutely flew by. Only 2 more months left in the year, guys. November and December, and then 2023 is gone. Done. Dunzo. Gone. So, wild. DM says, hello Tom and everybody. It is 68 degrees here in New York City and it feels a lot hotter. Feels really, really nice. DM, check out this shot of the Steinway Tower in the distance and Central Park Tower. I think I told you guys this was Wednesday. I went to the broker event on the 83rd floor of 157. Now the 83rd floor is one of the penthouse units at 157, so it takes up the entire floor. It's just an unbelievable property. I think it's over 6,500 square feet. It's coming to market very, very soon, and one of the most successful real estate brokers at Douglas Elliman has the listing. His name is Noble Black, just a fantastic guy. And it was an amazing event. It was just unbelievable. And as we look at all the Billionaire Row buildings here on the live stream, I can assure you all with confidence that being up in some of those penthouses in person, the videos just don't do it justice. You've got to try to get in there yourself and have a look at it. I mean, they're just some of the most amazing properties I've ever seen. It's kind of hard to even wrap your head around the fact that people live up there, right? Live in some of those residences. Just really, really well done. As we've talked about the developer multiple times, Extel, right? So what really pioneered Billionaires Row in New York City was Extel, right? Gary Burnett's company. It kicked off in 2014 when they topped out 157. It was the first building ever constructed on New York City's Billionaires Row. And a few years later, Gary Burnett and his team one-upped himself and built Central Park Tower, which is even higher and better, more amenities. But yeah, it was fantastic. 157, so keep your eyes peeled on that. And for the viewers who are interested in those trophy properties, trophy apartments, let me know. But for that listing, just contact Noble Black. They're getting ready to list that on market, which I'm really excited about. It's going to be an amazing, amazing property. Colton Manning's his weight. They built both towers. Yeah, so Extel built the tower right next to the Steinway building and 157. They also have a few more very interesting projects that they've completed, one of which it's very visible from Brooklyn and it's visible from the Brooklyn Bridge. It's called One Manhattan Square. That's another really, really nice building. You know, all the amenities, I mean, pretty much everything you could think of, they have. Hey, Juan Fernandez, what's up? It's good to see you. We're in Manhattan, 57th Street. We're gonna walk towards Columbus Circle. Now, right here is the Aman Hotel. We've talked about this before. This is one of the most expensive and luxurious hotels in New York City, and they just finished a massive, major renovation job on the facade of the building, and it sits adjacent to the beautiful Tiffany building, which also just went under $500 million worth of renovations, about $500 million worth of renovations. Now, LVMH owns Tiffany now, for those of you who didn't know, and Louis Vuitton, Moet Hennessy. One of their flagship stores sits right across the street from Tiffany, so it's pretty much like they own the entire block now. They have a lot of prime real estate here on Fifth Avenue. Carl Roth is here, says happy Friday to all. Hey Carl, good to see you, everybody from Canada. Thanks for joining us. Hey Chuck, good to see you. Addie Lulu says it's 75% chance of rain on Sunday. Damn, that's a bummer. How come it always happens like that? Just in time for pouring rain, right in time for the weekend. Don't do anything else. If you really want to get a job in tech sales, particularly at a SaaS company, software company or whatnot, I would do no going out with friends, okay? No going out to the bars, no football, no watching football. You're locking yourself in your room, you're locking yourself in the office, and you're doing deep study research on what are the top software companies to work at, what are the top telecom companies to work at, what percentage of market share does each company have, and which industries and which sectors have the biggest TAM, such as a total addressable market. And if you do that, you're going to come up with a list of target companies to apply to, okay? And you're just going to apply to all those jobs. But you got to know what to apply for, you got to know what product or service you're going to be selling, and you're going to need to know the value proposition of each product or service.
So once you get a list of those companies, and we've talked about all of those companies every night on the stream, go to their investor relations page, pull up all of the videos that are on that investors relations page, and you'll see the following. It'll be like Goldman Sachs Technology Analyst Day, Barclays Technology Analyst Day, where they interview the CEOs of these companies and they give updates on the business, okay? And as you start to get your reps in and study those companies, you'll start to notice which companies are the standouts, which companies are struggling, and why. And you want to go work for the best, you want to understand the product, and then you want to reach out to people who work at those companies, right? Reach out to the hiring managers, reach out to the account executives, reach out to the sales directors. That's what you want to do. And then you don't stop until you get a job. You relentlessly hammer these people until you get a job. That's what you do. Because it's a sales job, right? So you kind of have to be aggressive in your tactics of being persistent and applying to these companies, applying to these opportunities. And when you're in the interview, you need to present yourself like you're sharp as a tack, you know what you're talking about, and you understand which prospects you're going to go after on day one when you get the job, right? And why? Because that's what's going to come up in the interview. They're going to ask you, okay, let's say we give you the job tomorrow. You know, who are you going to call? Who are you going to prospect? And what positions in those companies are you going to prospect, right? If you're selling a cybersecurity company, or if you're selling a cybersecurity product at a cybersecurity company, and you're doing prospecting, like outbound calling, if you're an account executive, who are you going to target? Are you going to call people in HR? Are you going to call people in IT? Are you going to call, you know, the people in engineering at those departments? You have to know who to contact, right? Who are the decision makers? And if you know all that, if you could formulate all that, you know, you will not have any issue getting a job, and you will be extremely, extremely successful, and I'm sure you will be. All right, let's continue to head down here. Look at that. It's a beautiful shot of the Trump Tower and 432 Park Avenue in the back. Just really, really stunning buildings here. Well, let's head down 6th Avenue. It's a little bit of a windy night, so I think 6th will be the least windy avenue, if you will. I think as we go towards Columbus Circle, it's going to be a big wind tunnel, so we'll try to avoid that. Hey, Loose 72 is here. What's up? Good to see you. Thanks so much for being here. Appreciate it. S says hello. Thanks for joining us. Yeah, that's true. Wow, that's a really good one too. It's also a good idea to get letters of recommendation from your boss. I would agree. Vanquish says 432 Park Avenue, is it near? Yeah, so we started the live stream broadcasting right at 432 Park Avenue. So it's right on the corner of 56th Street and Park, as well as Madison Avenue. It's an amazing building. That's Harry Maclow's premier project. Really, really stunning there. Hey, Will, what's up? It says, hey, Tom, what do you think about equity research as a career? Do you know anyone in New York City that is in equity research? Yeah, I have a lot of friends who are in equity research in New York City. A lot. It's a really great career, particularly if you're passionate about it, right? If you really, really love the market and the only thing you can think about all day is companies and stocks, then it's a fantastic career for you, right? particularly if you know, let's say if you work as an equity research analyst at a bank or a major institution, and you're on a team that covers a very interesting sector, that is very, very fascinating work, right? So let's say if, you know, your major in college was biology, right? Or maybe you were a biomedical engineer in college. You know, you can get a really lucrative job on Wall Street as an equity research analyst in the biotech sector, right? Because you have an edge. Yeah, those are really, really great careers. But you have to love the market. You have to love stocks, because you're going to be researching these companies and writing equity research reports. And if you don't like that kind of thing, it can get very, very tedious. You're building a lot of financial models, you know, discounted cash flow models, DCF models. But if you love it, you're going to excel and you're going to do really, really well. So I would say go for it. I would say go for it. Will says, currently I'm an auditor / CPA, but I think I could do well in equity research. Oh, 100%. Absolutely. I think you do really well too. Now, since you have a lot of experience, maybe it would be best for you to go right to a hedge fund, right? Maybe work at a hedge fund as an analyst, maybe as opposed to going to a big bank and working your way up if you can get in there. Because, I mean, it seems like you're extremely smart, you're capable, right? You have tons of experience. So what I would do is compile a list of the most successful hedge funds on Wall Street and try to get a job there and be creative. You know, I'm not sure how old you are, it really doesn't matter, but you know, the younger you are, you know, be creative, right? Start to initiate some of the companies that you really like, right? So start yourself right now becoming an equity research analyst. You don't need to be employed to do it, you could do it yourself, right? So start to initiate coverage on some stocks. Start to write some equity research reports, publish them, email your equity research reports to all of these hedge fund managers and analysts on Wall Street. And if you do that to enough people, if you send it to enough people, you're gonna get a meeting with one of them and they're gonna be like, wow, we found this amazing analyst who was extremely aggressive, a self-starter. And that's what they're really looking for, right? That's what a lot of employers are looking for in this environment. We've all heard the narrative that, you know, nobody wants to work anymore, everybody seems so lazy. So if you can completely reframe that narrative and really wow people, like, holy crap, this kid is a killer. So just start this weekend, right? Pick a couple companies that you're really passionate about and that you like. Go to sec.gov, start to, you know, do a deep dive on all their financials, the 10Ks, the 10Qs, start to write your equity research reports, and, you know, then do your work on LinkedIn, do your networking. Saying, hey, I'm a CPA right now, I have tons of experience, I've just started to initiate coverage on, you know, XYZ stock, and I wanted to send you some of my research for free. Here you go, let me know what you think. If you do that to 50 people, you're gonna get a really lucrative job. And, you know, I've seen you here in the chat for about a year now, and you seem very, very capable. You seem extremely intelligent, extremely smart, extremely motivated. And I think you're gonna kill it. I think you'll probably make $1 million over the next couple of years as an equity research analyst at a big hedge fund. Hey, Vinny's here, what's up? Good to see you. Thanks for joining us. Let's go back to Fifth Avenue because I think it's gonna be a little bit quieter here. It's been a long week, so I kind of want to chill out on this walk and not be near the hustle and bustle. Hey, DC322 is here. What's up? Good to see you. Thanks for joining us. Brian, what's up? Good to see you. Hey, Martin F. This is hey from Martin in the UK. Martin, I got something that's going to impress you very, very much here as we make a left on Fifth Avenue. Check out the amazing architecture here at St. Thomas Church. We'll go right up to the front doors. It's an amazing, amazing place here. Look at this. Check that out. Really stunning architecture standing right outside St. Thomas Church. It's fantastic here. Hey, Mark is here. Says, hey Tom, how's it going from Perth, Australia? What is going on, my friend? Thanks for joining us from the land down under. St. Thomas Church, I think I wouldn't want to say one is better than the other, but I think the architectural integrity of St. Thomas Church eclipses that of St. Patrick's. I don't know, what do you guys think? What do you like better? The architectural style and the build of St. Thomas Church, or the more classic and iconic St. Patrick's that you're going to see right over here? All right, let me catch up on some of the chats here as we look at the beautiful Cartier building. Mark says, how about Trinity Church downtown? Trinity Church is really nice too. Trinity Church is at the very end of Wall Street, and it's right across the street from One Wall Street, which is actually the largest condominium, well, I should say office to condo conversion in New York City. But yeah, I love Trinity Church down there. Lots of history, really, really beautiful down there. I love it. Hey, UniJ23, what's up? Good to see you. Yeah, Juan Fernandez says they also look at education for you to have an MBA and economics, etc. Generally, yeah. You know, Wall Street is a very, kind of buttoned up, like club-like industry sector, right? So to Juan's point, a lot of the major investment banks will recruit out of all of the top 50 schools, right? So is it harder to get a job on the street or at a hedge fund if you didn't go to a top 50 school? Yeah, it's harder, but it's not impossible at all. Because again, you got to understand, Wall Street is the money, you're literally in the money business. And particularly if you're going to be a trader or an investor as opposed to an investment banker, right? So if your goal is to work at a hedge fund or be a trader or be an equity research analyst, at the end of the day, they want to hire people who can make the money, right? So if you are diligent and you have a systematic routine process that you can prove, right? And you have an auditor, audit your track record. You have an entire book of your equity research and your trade history, and you take that to a shop on the street. They don't care if they don't care where you went to school, right? You could have gone to a community college, and if you are a self-starter with a verifiable track record, right, that has a systematic framework, very important, a systematic framework, a systematic process to investing that can scale to large AUM, right? Then people will give you a shot, 100%. People will absolutely give you a shot. So it's not, you don't need the fancy degrees in the MBA. You don't need it. Do most people have it who are in very, very high positions on Wall Street and in tech, Silicon Valley, everything? Absolutely, yes. But it's not like a make or break. It's not a make or break. All right, here we are. The beautiful St. Patrick's Cathedral. This is fantastic. John says, dude, why is the market so down lately? I haven't had time to read up on what's going on. Well, I wrote a research piece that I emailed everybody yesterday. So check your email Yesterday at 6 o'clock in the afternoon, I wrote a research piece that I'm going to send out every other Thursday after the market closes. It's called the Behind the Street newsletter. So if you tap the QR code or scan the QR code, it'll bring you to our latest newsletter that I sent out yesterday. And starting next week, you don't even have to read it. There's going to be an audio voiceover, so you could just listen to it. So feel free to scan that and check it out. Let me know the format. Let me know what you think. Noah is assuming the CFA would be very beneficial for that route as well, and something to look into. I agree for sure. And it's also about networking too, relationship building. That is very, very important, and I think a lot of people overlook that. So particularly if you are, a first-year analyst, right, at an investment bank, yes, it's very, very important for you to double down, triple down, and put in a lot of hours. But I would say it's even more important to make sure you're getting around the right people within the firm, building your credibility, going above and beyond, and really scaling and growing your network. And this doesn't just apply to Wall Street, by the way. This applies to tech companies. This applies to everywhere. Because chances are, in your analyst class at the bank, people are going to either get fired, quit, or leave to other firms. And if you have really good relationships with those people, you never know. Maybe down the road, they are, a VP at, Deutsche Bank, and they're looking to hire somebody or recruit somebody to their team, and they remember you, and you have a good relationship with them. Well, they'll probably recruit you to their firm at a much higher base salary and a much, bigger bonus pool or something like that. So I totally agree. I think relationships is very, very important. Building those relationships is extremely important. I think they're putting up the Christmas lights here. Mr. 007 says, good evening, what's up? Good to see you. Thanks for joining us. Look at that. Hey, Maria says, I watch your live streams every... Jesus. Holy crap. Maria says, I watch your live streams every night. Love all the architectural visuals. I like listening to what you are discussing, even though I'm not from New York City. Well, thank you so much for joining us. And I'm glad you're here, and I'm glad you're enjoying the beautiful architecture of New York City. Yeah, I mean, New York is a beautiful city, and it's the diversity in architecture, I think, is what I appreciate the most. Some cities, particularly more modern cities, the skyline can really look the same, can it not? But in New York, you have the best of both worlds. You have, the massive Art Deco style buildings, and then you have the contrast to the really super tall Billionaires Row style buildings too. That's why I love walking up and down Central Park South so much, because Central Park South, you have the Sherry Netherland Hotel, right, which is one of my favorite buildings that we talk about all the time. You have the Plaza Hotel, which is just, timeless architecture. You have the JW Marriott Essex House, which is another Art Deco phenomenon. Then, I think you already know what I'm going to say as we make our way down Central Park South. You have Alwyn Court, which is just a stunning, stunning building, Alwyn Court. But then in the backdrop, you have a whole other utopia, a whole other experience. And that is the modern architecture of those glass-encased skyscrapers on Billionaires Row. 157. Central Park Tower, the Steinway Tower, and this one right here. This is 432 Park Avenue. So very, very different. Hey, Emmanuel, what's up? Good to see you. I don't know. Mark says, Tom, is Boar's Head a publicly traded company or a family-owned company? I'm actually not too sure. I don't think they're publicly traded. Or maybe they're a subsidiary or something like that. I don't know. Hey, Canal, good to see you. Juan Fernandez says, Tom, Reminiscences of a Stock Operator is free on Audible. Is it really, Juan? I didn't know that. I'll have to go download it tonight. It's one of my favorite books. Now, speaking of interesting architecture, guys, look at this. This is 270 Park Avenue. This is Jamie Dimon's brand new office tower here. Almost done. It kind of looks like they're topping out. Hey, MH says, Tom, I feel like your interior design style would be a mix of modern and industrial. I think so too. I definitely like that. It really depends on my mood, I guess. Not to kind of sound weird, but you know, sometimes I'm feeling in the mood where I just want to be in an Upper West Side brownstone, where you have a library that kind of looks like the Morgan Library, that has all of that really rich wood paneling all throughout. And then other times I kind of like the style of, you know, the Billionaires Row-esque buildings, if you will. But I think long term, like if I had to make a decision on one, I feel as if some of the older architecture and, I don't know, more, it feels more homey, I guess. Sometimes the really, you know, glitzy Billionaires Row in the Sky Towers doesn't really feel like you're home. I don't know if that makes sense. Not all the time, but sometimes. I feel like I could walk into an Upper West Side brownstone every day and feel like, okay, this is like a house. This is like my home, I guess. Hey, Zach Wolf, what's up? Good to see you. Juan Fernandez says Jamie Dimon was pretty bearish last week. Yeah, and Jamie Dimon also sold, I think, $25 million worth of stock, did he not? I think he did that today. And everybody was getting on his case about it. Now, yeah, there is a correlation, I guess, between the C-suite selling their stock and future performance, but I think that's relatively short term. Tom M. This is about $100 million he sold. Yeah, and what was his reasoning exactly? He said that he needed the money for his family. I mean, look, here's my take on it. The guy can do what he wants, right? Now, I know what the scrutiny is. It's like, okay, if you're selling all this stock, you know, just as the market is sort of breaking down and the likelihood of the U.S. falling into even, you know, a micro recession is pretty high. It doesn't really send a good signal to the market, and I get that, but you know, you also have to put yourself in his shoes. Think about what happened in 2008. There was a lot of very wealthy people who worked for major banks on Wall Street that when their banks went under, like Lehman Brothers, their net worths went to zero, right? Because on Wall Street, your bonus isn't necessarily all the time just like all cash. There's a component of it that is stock as well. So if your stock has invested and you can't take the money off the table, right? Well, there's a big risk there that if something systemic happens in the banking system, you know, you could potentially lose all that money. So I think he has a point to sort of take some money off the table, particularly assuming that's all vested stock. Larry Van D says Dimon didn't sell his shares. He announced he will sell them in 2024. Copy that. Hey, Ricky says, I miss New York City so much. Wish I could afford to live there. But I need space and I can't afford New York City rent. Yeah, it's definitely gotten to be a very expensive city. Hopefully you'll be back soon. I think that's a big criticism that everybody has in New York City, not just Ricky. He makes a good point. All right, let's check out some of the construction progress at 270 Park here. Looks good. I like the design on the bottom. This will be a better vantage point. Hey, Elliott Wave Review. This is Tom. Are you more bullish on gold or Bitcoin for the next couple months? Elliott Wave Review, did you see the two charts that I posted today on Twitter? I mean X. I don't think I'm ever going to get that right. I don't think the name X will ever stick. I'm just going to continue to call it Twitter. Anyway. But yeah, I mean, gold now is trading over $2,000 an ounce. And I wrote this in the newsletter. I'm not sure if you got a chance to read it yet. But if gold breaks into new highs, right, I'm not telling anybody what to do. We're just having a discussion. There's always that one person that'll email me after the stream complaining. This is a stream where we just have conversations about the markets. If people can't handle that, then don't watch it. But if gold breaks into new all-time record highs on volume, I'm going to be getting in there with big size, like very, very big. Because the measured move on that is massive, and you have all the geopolitical nonsense going on. You have inflation continues to be relatively sticky, and gold topped in 2011. So, you know, pull up your Bloomberg terminal, pull up TradingView or MarketSmith or whatever you use for your charting software, and look at gold and go on a monthly time frame. In 2011, gold topped, put in a top, and it's been down to sideways over the last decade. That is a major, major base. And over the last 3 months, we've been trading in a very, very tight range, from 2,050 to around 1,700 bucks. We've been trading in that range, and we just broke over $2,000 an ounce today. So to answer your question, I'm watching it. But again, for me, if it breaks into new highs, it's really going to be a momentum play, right? Gold isn't a company. It doesn't spit off earnings. It doesn't have cash flow. It's more of like a Paul Tudor Jones, Stanley Druckenmiller, trend trade. But that can't be ignored, to your point. Another thing we covered that I'm concerned about, and I want to know what your take is the following. We need to be paying very, very close attention to what's going on in China right now. We've been covering this for the last 6 months, maybe even more. The Chinese commercial paper market is absolutely falling apart. The calamity is probably almost worse than 2008 already for them. And that's causing a lot of fear, particularly between high net worth and ultra high net worth individuals in China. And they're trying to get exposure out of the country. They're trying to move wealth out of mainland China. And it's very, very hard for them to do that right now. And for obvious reasons, right? CCP and all that. But that's probably why you're seeing this massive flight to safety in gold and in digital gold. So you not only have the geopolitical conflicts that are arising in the Middle East, but you also have some significant deterioration in China, particularly in commercial real estate and residential real estate there. So I think you're seeing international fund flows into, flight to safety assets like gold and to Bitcoin. Now, could these trends reverse? Absolutely. They're momentum plays. It's very hard to evaluate these assets because they don't spit off any free cash and they're not stocks, right? They're commodities, and one of them is a digital asset. So I don't know. What is your take on it? I'm more interested to hear what you have to say about it. Are you bullish gold through the end of the year, or what do you think? Carl Roth says the Middle East gets worse. I'm going into gold as well. Tom M says going to trade contracts to the physical. I usually express my view in just the ETF GLD. Gore with Wealth says when you're back in Miami, you should tour the Bentley residences. So we had somebody come into the office from the Bentley residences and drop off a bunch of really cool stuff, like pamphlets, hats. I'll show it to you guys, but you are correct. So that's being built in Sunny Isles Beach, right? Which is not too far away from me, actually. Yeah, that I'm really excited about. Very, very cool place that's going up. It seems like a pretty interesting trend, right? So you have, look, we'll see what's going to go on with that as things continue to deteriorate, I'll say. I don't really know. A lot of these new projects, I think there is a slight chance that they may be put on hold, mainly just due to construction costs. If you think about, an individual person wanting to get a loan for a 30-year fixed rate mortgage, that's nearly 8% now, right? Imagine what the debt costs on a construction loan. Not a lot of people think about that. It could be significantly more than that. So I wouldn't be surprised that if some projects, these developers are getting quoted 10% money, double-digit money now, which is a big concern, particularly as demand is sort of curtailing here. So we'll see. But very good point, yeah. It's an interesting residence there for sure. Girl with Wealth says yes, and I like that you could drive your car and get out right at your residence. Very interesting concepts. It's wild what's going on. Now, those type of towers, everybody, that service the ultra high net worth and high net worth individuals, they've been met with I would say, very, very big backlash and scrutiny from a lot of politicians, mainly because we have a huge inventory crisis in the United States, right? Now, I'm not being political, I'm just sort of reporting the news. Some local politicians say, hey, all these developers are building inventory, but it's not affordable housing, right? I mean, I'm assuming, I can't afford an apartment in the Bentley design tower. These aren't affordable units. These are, ultra high net worth luxury toys in the sky, essentially, right? So there's been that back and forth. And I think some of that criticism is warranted. But on the other hand, I think a lot of that criticism isn't warranted because of some of the policies that the government is enacting that makes these more affordable price points not profitable for developers. So it's an interesting tug of war, if you will, for sure. But I get it. The optics and the perception is bad. Ooh, it looks like we have a Halloween party at the Yale Club. Cool. Happy Halloween, everybody. But if you're all enjoying the live stream so far tonight, feel free to leave a like on the video and click the subscribe button if you're new. We generally do these live streams every day starting at 8:30. And if you'd like to receive all of our equity research for free. Every other Thursday after the market closes, we send that out to all Walks on Wall Street subscribers. It's a great free way to support the stream. And if you miss an episode of Walks on Wall Street, you could read all of the recap there. And you could scan the QR code and read the latest edition of the Behind the Street newsletter. This way you will be signed up to receive it every other Thursday in your email box. Let's see if we can see any other costumes coming out. Unfortunately, the building is covered in scaffolding. Sort of par for the course here in New York City. Could we do a quick time check in the chat? I just want to make sure I'm not missing my train. Hey, Ike is here. Says, what's up, Tom? When did you first become fascinated in business and finance? Also, are there any programs to get youths interested in business finance? Yeah, I think there's a lot of, I would say very young, to answer your first part of the question, very young. And I think there's a lot of free resources on the internet and at your local libraries now. The problem is just not a lot of people know about them, right? Not a lot of people know about these free resources. So, you know, if you are a very, very good autodidact, right? If you have very good autodidact skills, which is one of the best pieces of advice I've ever gotten in my entire life. And I posted about this on Twitter. If you want to follow me on Twitter, it's @WalksWallStreet. I had an old manager say, if you can get really, really good at teaching yourself things and being a self-starter, you will always generally be okay. And that really resonated very well with me. Because with the internet readily available at your exposure, within reason you could generally teach yourself any skill, right? If you want to learn Python, if you want to learn C++, Node, C#, you know, Rust, you can pretty much teach yourself how to do that within reason, right? Now it's going to be 10, 20 times harder than if you went to a traditional college, university, but generally speaking, if you have the mental fortitude to push through and study, there's tons of free resources online for coding classes and finance classes, right? I'll give you a good example, and here's a really good resource. At the NYU Stern School of Business, which is one of the best business schools in the world, right here in New York City, there's a professor, Damodaran, so Professor Atswat Damodaran. He's considered the Dean of Valuation. He's one of the most sought-after professors at NYU, and the majority of his coursework he publishes for free online. So if you pull up another tab and go to his YouTube channel and just type in Professor Damodaran NYU, you can literally sit at your desk and listen to all of his lectures for free. He'll teach you how to build financial models, teach you how to read an income statement, teach you how to read a balance sheet, teach you how to evaluate companies. And this is one of the best professors for business, finance, and security analysis in the world, right? And he's just generous enough to post a lot of his lectures at NYU for free online. And that's just one little piece, right? So again, if you have that self-starter, you know, go-getter mentality, and you have the mental fortitude to sit at your desk, you know, and do some deep work, a lot of this stuff, particularly finance, I should say, particularly finance, you could generally teach yourself this stuff, right? It's not like an engineer or you're being a doctor, where you need to go to, you know, significant study and university, right? Finance, you can kind of teach yourself. And the good news is the best money managers, the best professors, all of their work is put out for free, particularly in other obvious example is Warren Buffett, right? The most successful investor on the planet that has ever lived ever in our lifetime. Every single piece of literature on Warren Buffett, Berkshire Hathaway shareholder letters, online for free. But 0.1% of the population actually goes and reads them. Every single Berkshire Hathaway shareholder meeting is archived and streamed on the internet. You can watch them, you can sit down, you can take notes. But yeah, that's what I'd say. Wow, this is a really nice shot of Grand Central Station. Look at that. That's stunning. Now they have some construction going on, so there's no taxi cabs lined up and down here. But I love this area. Love this area. Grand Central Station, beautiful Pershing Square. You have an amazing shot of the Chrysler Building in the distance. This is one of my favorite spots in New York City. I don't know, what do you guys think? I love these stained glass windows into Grand Central Terminal, and you also have the MetLife building in the back. I wonder what they're doing here, guys, that they closed down. They pretty much closed down this entire street, it looks like, doesn't it? I know Hawaii is like, I love it here too. Yeah, it seems as if they closed down the entire thing. I don't know why. I don't really see any construction going on. Maybe security reasons? Huh. I think this shuttle bus is having a hard time turning around. Oh, Jeff in Southern Tier, New York says they shut down Grand Central Station. Really? Michael says reports were that hundreds were arrested just an hour ago. What? Isn't that crazy how there could be like some major event happening and you could be right next to it and you don't even notice it? Pete NYC says protests earlier over the war in the Middle East. Really? So Grand Central Station is locked? It is locked. I'm seeing that guy try to get in. So how is everybody getting home? Let's investigate this further. Wow. All right, I'm going to start to read the chats because you guys probably are more in tune with this than I am. Oh, Jeff, you have to go through Penn Station? Well, how are you going to get to the Metro North? I do see some news people out there. Looks like they're reporting live. Damn. Let's go in. Well, actually, maybe we shouldn't go in if there's a crisis going on. We'll see. Oh, only ticketed passengers. Got it. So you have to have a ticket in order to go in. Wow. That's kind of unfortunate, you know? Hey, thank you. Huh. Yeah, look, they even blocked it off through the for the through traffic here. Well, I guess you learn something new every day. I mean, it just goes to show how big the city is and how oblivious, even somebody living and working in the city. I work literally 10 blocks away, and I had no idea any of this was going on. Wow, Deborah says 300 people arrested? How do you even arrest 300 people? Well, here's the good news. Look at how gorgeous this shot looks going all the way down 42nd Street. Beautiful shot of One Vanderbilt. Well, I never thought I'd be walking down the middle of 42nd Street on a Friday afternoon when this place is usually jammed. But doesn't it look stunning? Hey, Ryan Beck's here. What's up? Ryan, we officially concluded earnings season for the Magnificent Seven. Oh, actually, that's not true. Apple reports November 2nd after the Fed meeting. But look, I think generally speaking, I was most impressed with Amazon yesterday. I think they blew the doors off of the building. And also, I think Microsoft and Meta posted really good quarters. The only person who let me down this earnings season was Elon Musk, unfortunately. Disappointing. Extreme erosion in gross margins. Oh man, this is a cool shot here. Hey, Pedro's here from Brazil. Good to see all of our Brazilian viewers. And happy Friday to all of you. Thanks so much for joining. Hey, Tiffs, what's up, man? Event at Coffee Park in Red Hook tomorrow at 1. Do you want to come? I can't come tomorrow because I'm going to be at the Conover Sunday for the open house. I'm down to hang out, get coffee on Sunday. If you're going to be in Red Hook on Sunday, let's hang out. I'm down. But what kind of event is going to be going on at Coffee Park? It's just, if I'm going to go out to Red Hook, Brooklyn, I can't do it 2 days in a row because the commute kills the entire day, you know what I mean? Just takes a little bit too long, but I'm so down to go to Red Hook on Sunday. I'm going to be there for the open house anyway, so let's do it. Let's kick it, my friend. Tiff, do you have off on the weekends, by the way, or is your office open Saturday and Sunday as well? All right, we are looking at a perfectly centered view of Pershing Square. I feel like somebody told me that this Hyatt hotel is going to be taken down. It looks like it's open, but maybe it was going to be some renovation project, who knows. Chrysler Building looks fantastic too. Another amazing Art Deco building. Oh, Tiff says it's a fall event at Coffee Park to promote the new clinic. Only open for weekdays for now, though. Oh, cool, man. Well, fantastic. Yeah, so if anybody, so I guess I'll tell you guys, if anybody is moving to the Red Hook neighborhood, or if you are there already and you need a fantastic primary care physician, pediatrics, our friend here at TIFF is a doctor that's opening up an amazing clinic with NYU, brand new, state-of-the-art, amazing, in Red Hook. So reach out to him, come show support, and get care from the best in the business. So I'm excited about it. If it's your event, maybe tomorrow I will come and show support. Give me 1 second. All right, let's head back into the main drag of the city. You know what? I think we'll end it there because I started the stream at 10 o'clock and I don't want to get home at 1 a.m. Oh, a TIFS is both adults and kids with gym and dental health as well, and mental health. So there you go, you got it all. All right, everyone, I'm gonna cut it short tonight, mainly because I started late. Thank you, everybody, for coming out and exploring the beautiful city tonight. I want to wish all of you a very safe, happy, and healthy weekend. Take the time you need to recharge the batteries, spend time with family and friends, and most importantly, be kind, generous, and compassionate to one another. Particularly at a time like we have now, you definitely need to do that. Once again, if you scan the QR code on the screen and punch in your email, you will be signed up to receive all of our equity research for free. So every other Thursday after the market closes, you will receive the Behind the Street newsletter. So check your email because I sent it to everybody yesterday at 6 p.m. And let me know what you think of the new format. So guys, take care. Girl with Wealth, all of our great moderators. Robert, Joan K, Atif, Lisa, Hawaii, have a fantastic weekend. Colton Manning, have a wonderful weekend. Baker 405 or 504. Austin City Limits, Larry Van D. Abdullah, Mohammed, Victor Alfonso, Bree Grams, Deborah, Gary Carpenter, Noah Baum, Dale, thank you so much. Jeff in Southern Tier, New York, DM, Tariq Khan. I will see you all tomorrow. Take care and have a great weekend.